Good morning, traders. Welcome to Monday of this beautiful week, the final week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump in, as always, we need to make sure that we know what the news is and what's going on today so that we're not taken by surprise by anything that kind of jumps out at us. So looking at the news for today, obviously, there's not much. Investing.com's gold and S&P 500 index numbers, they rank them at medium. I think that might be a little bit biased since that's coming from investing.com. Realistically, at 1:30 in the morning, they're not going to do much. We also have 6 o'clock OPEC monthly reports going on. And then later today at 11:30, the 3 and 6 month bill auctions. So the news calendar, very, very light from a daily perspective. There's just not much going on for today. And, we're coming into some pretty interesting price action. So with the news out of the way, or the lack of it, we can jump in. So let's take a look at some charts for today. Today is 12/14 of 2020. Starting off with the NASDAQ, and we're seeing some very sideways price action. Overall, the market had that really nice drop to the downside, and since then, it's not really done much of anything. It's just kind of hanging out. We've got a little bit of a higher low, which was a pretty big deal for the buyers, and now we're challenging the highs. So there's definitely some push, right? Buyers are trying to get this going to the upside. We have an unfilled weekend gap coming from Sunday, but for the most part, we're range bound. We're getting closer to the top of that range, generally speaking, that would dictate a sell. But there are a few caveats. Obviously, we've got rising support coming in, and the fact that they held this channel so nicely, like to the tick, would suggest that it's there, right? When you have to the tick support like that, obviously something happened there strong enough to reverse the market this aggressively. I've got to assume that there's got to be some form of a channel or some big level of support that's also moving along with price. And, well, it's kind of showing its aggressively bullish head, if you will. Any dips back towards this rising support are going to be a big zone of interest for buyers to come back in. And, realistically, do I want to be a buyer? Yes. But do I want to be a buyer way up here? No. It's a little bit expensive up here. This is where a lot of buyers are going to be taking profit. But if it can get a breakout above the highs, then a continuation rally back up to, the 12,600s, 625, 630s would be the next likely zone of interest for the push. If the buyers fail, then we're looking for that pullback to the channel. Then over to the S&P with another weekend gap to the upside. For the most part, after the weekend gap on the S&P, the market hasn't really even gotten outside of that first 15-minute bar. It's just kind of hanging out. Really, really sturdy range going on here for the S&P. We still have that unfilled weekend gap, and there are a lot of things suggesting that any pullback is probably going to get bought. Shorts taking profit, buyers filling the gap and buying in for a continuation pop, etc. The big thing that stands out here is we're right on top of resistance. This is the zone that buyers need to break above if they're going to keep going. And if they are able to keep going, then there's no resistance up until like 3,700. So there's plenty of room to grow. It's got to get through this 75 area first. There's a lot of a mess here, and considering that it hasn't even really broken above the first 15-minute bar since Sunday open, yikes. This is not going to really give me a whole lot of faith in the first breakout either. It might be stuck here for a little while, and I might be better off looking to buy the dip, assuming that the buyers want to reload and then rotate back to the highs, because where it is now is just a mess. Then over to gold, and a pretty nice move to the downside. I mean, this looks like a situation where buyers just kind of got dumped on. And what I mean by that is normally when you've got a rotation up, right, you've got the higher low, you've got the really strong rally to the upside. This is the chance for buyers to really prove it, right? And, well, they didn't do that great of a job. But as soon as it rotated down and hit a new low, it didn't spend more than a couple seconds there and then ripped back to the upside. So with such strong bullishness, it's likely that buyers are going to be trying to buy in. This is where things get a little bit tricky, though, because it never actually broke above that high, right? A lot of buyers will get stuck into the, oh man, look how aggressive that was. But it never actually broke the high that caused the trap last time. It's got to get through that. And, well, it didn't. So with that failure, we've got these early buyers who are trying to get that rotation up buying, 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 goes through the weekend. Sweet, it didn't really pull. Okay, let's buy more. Oh, wait a minute. Uh-oh. And then they all start giving up. So with that flush to the downside, this is where smart buyers are going to be coming in with the assumption of, well, I still want to be long, but we never broke context up here. So bears still had it at that point, and I can't buy any of that. I've got to wait for a better price. It finally gave that better price, and it just so happens that all of the early buyers handed over their positions to the other ones. So this is kind of the proving ground down here. Yes, we made a new low, and the buyers potentially got heavily trapped. If this is going to be a bullish rotation, it shouldn't spend a whole lot of time here, and we'll see the market go ripping higher. If this is the start of a two-legged move down that's taking over the buyers, which might kind of fit, right? We had that big move up, balance, and then a failure. Now we're finding a balance again. It kind of looks like a head and shoulders. And, well, guess where the neckline is? We're trying to break through it right now. So if it does start breaking lower, there's not much left to hold price up. We've got a little bit of support at 1810, maybe a little bit above that at around the 20s, but then it's just a wide open door all the way down to 1780, and that would be the completion of that head and shoulders pattern that's going on right now. So it's gold's definitely on the balancing point. They've got to show up to the party, or there's a lot of ground to lose. Over on crude oil, and still just kind of stuck in a wedge, had that initial really strong breakout move to the upside, but after that move higher, you can see if you were to look at the bottom to top of that rally from there to there, we haven't broken out of it. It's still all inside of that price action. We're just wedging. So that's assuming that we're in a range. So realistically, I want to buy low, sell high. And given the trend on crude oil for the last little bit here, I would rather be a buyer, go figure. So what would make a little bit more sense would be seeing this rotation down, get back to the base of where all of that support is, and then find the buyers defending it off that 46 to rip the market back up again. That would be kind of the springboard location to see if they can get at that move up. Now, if they fail through the highs first, that could cause some problems, because if it does show resistance at the 47, 70s, 80s, then we've got a potential double top. That's exhaustion, and crude oil might be set to pull back a lot further than just where it is now. So really, buyers want to see it trap lower first. A move to the upside and a failure could be some problems. If there's enough strength, maybe they get a breakout, pullback, continuation above the highs, right? Breakout, pullback, continuation. But oof, man, I would much rather see them trap the lows first. It's just going to be an easier road, or a less rocky road, I guess is the best way to put it. Over on the euro, and just kind of grinding its way up towards the highs. We've got a lot of resistance up here in the 1.219 area, 22 area. There just seems to be a big brick wall up here, but that brick wall is relatively thick because it starts all the way up here but goes all the way down here. Creates a really kind of wide range for traders to fight over. From a 15-minute perspective, that sort of creates a secondary range zone. There's more than enough space between that for a range play to take off. That makes it a little bit awkward. So really what we have to try to do is stack the odds in our favor and wait for locations where not only are we at the highs of the range, but we're also at the highs of the wedge. Or not only are we at the lows of the range, but we're also at the lows of the wedge, or a false break low into structure, right? Those are the types of things that we want to try to line up today in the euro, because realistically, it's very sideways, and getting stuck in the middle is a surefire way to get caught, just to see it trap you out and then go ripping back in the direction that you originally intended. These are the nasty type of days when the market's super, super sideways. It has an overall trend direction, right? The euro's going up, but it's vindictive on the way there. Every buyer who tried to buy along the way, if their stops were too tight, they got ran over just to see it rotate right back up and try to continue. So we've got a lot of chasers coming in. It's just a matter of how much they're going to let it pull back before breaking out again. And then finally on Bitcoin, we've got a little bit of a balance going on with the continuation move to the upside. There was a nice little pullback that, again, just kind of similar to what we were just talking about, actually. It going back and taking out all of the stops, right? Buyers trying to buy along the way with the trends. Well, just like the euro, it came back and whipped everyone out first before going in the original direction that they intended anyway. So now that we've got this really strong rally higher, chances are buyers have their stops too close, and we're going to see a nice little pullback to take those stops out. That's just the way that the market's been moving lately. Realistically, a nice zone of support, very obvious, cutting through the middle here, all around that 18,700, 600 area. Nice little flush back to wipe those stops and then see it take off to all-time highs would be a beautiful scenario for a trap rotation back to the highs. And that could add enough fuel to the fire to get some serious juice above the highs, because then you got everyone who got trapped out, they're being forced to chase if they want to still catch the move to the upside. And that's a big, big 1-2 punch to get a blow off through the top. All right, well, that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. Have a fantastic trading day out there today, and we will see you all tomorrow. Thanks.